struggling with prop firms? Let's go. Now you've been trading for countless months, years, worst case scenario, and you still get nowhere, right? I'm going to be showing you guys the simple process, a simple process where you can just simplify trading, right? And this is gonna be one of the probably best videos you ever see, how I was able to become a 700k funded trader. Why? Because all I did was make trading simple. I approached it with a simple mindset. I simplify everything, right? Even the students in my one-to-one mentorship program, they fully understand, how I show my strategy, how I approach, what mindset, the way I look at the breakdown, the markets, everything, right? I mean, look at this simple approach, but still, this is gold, right? We're using gold for the example. Some of my traders trade gold, not recently, just because of gold's it's on an all-time high, but right now, enjoying trading GJ, GU, me personally, and even Euro USD, just capitalizing on them zero spreads, small tight spreads. But look at this, 1 to 7 RR, almost 1 to 8, 1 to 6 risk to reward, 1 to 22. I'm going to be breaking down each trade as well, 1 to 10, 1 to 5, 1 to 6. And once I mark out the key levels, support resistance levels, whatever you want to call them, I call them key levels because that's what they actually are. It's super simple, guys, very, very simple. And if I just say US elections today, this is one of the trades I took, 1 to 4, smashed clean, took a buy from here, and you can see this huge single bullish candle just screamed, and just right. This was yesterday, and by the way, live trades before and after, my losing trades, I post everything, right? Live when taking a position, so you can't fake this, right? This is in the moment. If I didn't know how to trade, can you imagine if I'm posting live trades and I'm just posting consistently? I've lost every single one. No, if I lose as well, I do post my losses as well, but when I post my trades beforehand, like before they even hit that TP, you get to see it. And once, for example, this was on GU, right? This was the trade. This was the trade when I put my stop loss at break even. So you can see I have no idea at this point. This is at 705. I have no clue at this point where markets, if it's actually going to even hit my 1 to 4, but I've already collected my data. I know on average how much the market moves. So this is at 705 AM UK time. Stop loss at break even with about 1 to, I would say a little under 1 to 2 RR, and then winning trade gets posted when this one here at, look at this, 713 within a few minutes. Just what I love about GU, just moves insane, and then yeah, collect that we hit the 1 to 4, super clean. Now again, right, collecting data, super important. If I guess this is one of the days I used to trade GJ. This is on the 4-hour time frame, right? So 1 week is like one blue line to blue line is 1 week. One red line to red line is 1 month. So you can see how much data I've collected from here, right? I always, then I don't just stop here, add all my data onto Excel sheet, just so I know, where the wins, losses, winning days, losing days, everything, right? And it's all about collecting data, and that's where ultimately the confidence comes from. Then I even go on to Canva, put it on and just print this out and put it on my wall, so I can see my blue trades, like the winners, 1 to 4s, how many consistently, losses, how many consistently would I get, and just that's why when I place a trade, I just let it run, because on average I know what kind of how much the trade should be going to on average until I close the trade. With this one here, so for example, so the point I'm trying to make, right, let's just simplify and break down everything, right? This on average is a 1 to 22. Now will I always go for a 1 to 22? Absolutely not. So this is one method if you want to learn how to draw your fixed TPs and fixed stop losses. This is one. Okay, let's go step 1. So on average, let's just say this is a 1 to 6, this is 1 to 7, this is 1 to 10, 1 to 5, 1 to 6, 1 to 6, 1 to 5. So 123. So from the data I've got here so far, by the way, back test more than 200-300 trades. That's my advice. On average, minimum, we're collecting 125s. Now, just because we're getting 127s and 110s, does that mean every time I just want to hold to trying to get a 1 to 10? No, it's appearing the least, right? 1 to 10s and 1 to 7s, they're appearing the least. 1 to 5, because it is a 1 to 10, I can get my 1 to 5. This is a 1 to 7, I can still get my 1 to 5. So 1 to 6, I can still get my 1 to 5. So 1 to 5 is what's happening the most often. So, you know, that tells me on average on TP, aim for that fixed TP of 1 to 5. Now stop loss. So this is, let's say, 110 points, 155, 155, 110, 155, you know, 110, whatever you want to call it. So look at this. My stop loss is not being hit on average, right? So this is how you can work it out as well. Look at how much on average, what is the best stop loss that's providing you enough, you know, giving you enough room for eventually when your trade goes into profitability. So that's what you can do for your stop loss and for your TP. That's step 1. Now for the step 2, the next stage, guys, how you can make simplified trading is, what you can do is go on a bigger time frame. This is what my advice would be. This is the break and retest strategy. I always like to zoom out, right? Get the bigger picture, what's happening, right? You want to see from a, you know, it's taking 2, 3, 5 steps back, not zooming in like this just because you like the colors of the candles. Take a step back and just see what price is showing, like what is trying to show you, right? So what you want to take into accountability is volume, right? This feels more like I'm making a video for a beginner's course, but no, it's nothing like that. This is more like how you can simplify trading, right? How you can not get overwhelmed by when you see all this. So let's just keep it simple. We see small little green candles. Some candles are bigger than the other ones, right? So this tells me buyers had more control over here, then start losing a bit of control, and then here there's a bit of a fight, you know, tug of war, whatever you want to call it. You know, decisions being made with the, you know, market's going to get pushed down or up. So you can see that's why sellers come in, buyers and sellers, consolidation, market starts ranging, and then huge buying pressure comes in, and then selling pressure comes in as well, and then market, you know, eventually you can see the buyers start winning. Why? Because look at this. Let's zoom in. Now this is basically video is going to be focusing on how to simplify the charts, right? So look at this. Huge bullish candles, but tiny bearish candles. Now this is a super strong bearish candle, but why does this have zero value in my eyes? Why? Because it's not really happening nowhere near my key level. The body of this candle is in no man's land. So once you mark up your levels, you want to see what kind of if you watch my previous video, or the one before that actually about candlesticks, you want to see where the candlesticks are happening, like what kind of candlesticks are you getting, which area, right? If you gain this super strong bearish candle here, if I just mark this out for you so you can see it more clearly which one I'm talking about. Let me change the color of this to yellow. Okay, this super strong bearish candle, right? But it's happening in the middle of my zones. So for me, it's like, I don't care, you know, no value, right? Super strong bullish candle. Now we're getting this decent, you know, quite a strong bearish candle. But we're in the up, you know, kind of, if you can call it uptrend, right? We're making higher highs, higher lows, higher highs, right? It just is market just pushing higher and higher. So that's another way that even if you get your strong bearish candles fighting that, indicate the market wants to push down. Also keep an eye on the trend. Where's market going? The market is just going higher and higher. You should only be focusing on buys. So here, market pushes higher. So we're getting huge bullish green candles. Again, a bullish engulfing candle. Market sometimes has to, you know, it can't just keep moving up, all the way up and all the way down. It has to correct itself. Market moves in waves, zigzags, or whatever you want to call it. And that's what happens. Market comes a little bit down, but it doesn't break this, which was the previous resistance. Now is the new support. It doesn't break it. Market continue pushes, you know, pushing higher. And then we get all this selling, you know, all the sellers just coming in, and just tanking the market from this high here to this previous, again a previous this resistance here became the new support, and then this now support, right, is established here. Then price comes down and then, you know, respects this support level, and then we get a super strong bullish candle over here. This is why I learn your candlestick patterns as well, guys. Look at this. The market just, yes, if you would have gone for a buy, you probably would have got stopped out depending how big your stop loss was, but look at this. Your bias would have been correct. It does go up though. So this is one way you got to focus on, you know, what is the market showing. So accountability, what you got to take into accountability: trend, markets, buyers are in control, right? Buyers are in control. You only want to focus on taking buys. Look at the candle sizes. Look at the candle, you know, look at the wick rejections. What kind of candles are forming at which key level, which small resistance level. So that's step 2, right? This is one way you can just I'm just trying to keep everything simple. I don't want to go into, like, you know, these so-called difficult strategies out there. You can methods, SMC, fair value gaps, and liquidity sweeps and all that kind of stuff. No, I just focus on what I show my students is wick rejections, major rejections, equal high, equal low patterns, you know, where price is showing clear rejections, and that's all we work off. A super simple method, nothing insane. Now here, example, huge selling pressure. Look at the size of these. This is 1 p.m. UK time, New York session opens. Look at this, huge selling pressure, market comes down, right? So what happens? Let's just go to a smaller time frame now. So once I marked up my levels, right? You can mark your levels of your major rejections. Once I've marked up the levels, so what do I see here? Right? What do I see? Bearish candle. We get the break of the key level. So how would I take this entry? Now this is step 3, right? You wanna I want to simplify this as much as possible, where you can get the best entry possible, right? So what you want to do, and you're going to stick to one, and this is super important. You want to be sticking to you know, one fixed time frame. Don't be taking your entries on the 5-minute and also the 10-minute and also the 15-minute. That's stupid, you know, to say the least. Now what do I see here? Right now, this is on the 2-minute time frame. So suppose, okay, we get the breakout here. Now clean rejection. This shows the quality of my key level drawn. Clean rejection. Why? Because first, when price comes down, it's rejecting my key level clean with the wick rejections. The first time I get a breakout, now it's respecting as a resistant cleanly as well, and then market just tanks. But where to take the entry from? Now on the bigger time frame, on the 10-minute, this is I'll come down to the 2-minute, but now what are we looking for? I know there's a breakout here, but not the best. But on the bigger time frame, I'm sure this would look like a wick rejection. On the bigger time frame, look at this. This when you know, refine this, a engulfing bearish candle pattern. So you can even take your entry from here, or if you was a bit more conservative, just wait for price to come back up here. So let me just change the color of this so you can see what color should we change it to. Purple. Okay, so you can just take your entry from there. Now again, this is why it's super important to learn your candlestick patterns. Look at this. What do we see here? Again, a engulfing candlestick pattern, right? Price just keeps pushing further and further down. I wouldn't take the sell from here. Why? I've not got a clean, you know, you want to stick to one pattern as well. Don't be trading going off the engulfing pattern, then be going off the evening star, morning star, shooting star, all these patterns, right? You want to be sticking to one pattern, right? Now let's just go off this one here as well. Price comes down here, and then what happens? Price comes down here, right? I'm getting a bullish engulfing. Once price comes down, you can take a buy here, but then someone's going to be like, might leave a comment saying, well, wait a minute, this is a bearish engulfing, so I should be taking a sell. No, that's not how it works. Why? Because this bullish engulfing has happened above support, right? This bearish engulfing has happened also above support. What I'd be looking for to take a sell, I would want this bearish engulfing to do either two things. One, either breaking through this support level and like forming like that, or a bearish engulfing happening below the support. That shows clear selling pressure, right? Seller intent. Again, bearish engulfing, but well, no, it doesn't make sense, right? This is still above support. Perfect example would be this one here, bullish. Well, this is not engulfing, but let's just say if it were here, bearish engulfing here, but but then market moves a little bit down, but because we're already in so much buying pressure, so you know, so that's why I'm not in any you know, the bias is to go for a buy, not a sell. So but see, this is why it's super important as well. You got to keep an eye on, you know, trend direction. I know market is trending down, that's why this bearish engulfing worked out perfectly with this trend. Actually look at this here, actually perfect. See, now this was the reason for the breakout, right? You want a breakout, and then this is your entry signal. You don't want to use your entry signal as your breakout. Does that make sense? So once you, I mean, this is a strong signal anyway, because look at this super strong bullish candle here. This would be normally indicating just take a buy from here, because super strong chance the market will reverse. But yeah, I don't want to fight this huge bearish candles, right? So that's, you know, so yeah, I would not want to take a buy off that. Okay, let's zoom out. Let's just right, okay, so let's go back on the 10-minute time frame. And if you notice, guys, I'm using the 10-minute time frame, which is not a time frame that's popular, is it? Normally we hear about the 5-minute, 1 minute, you know, 15-minute, 30-minute, 1 hour, you know, 4 hours daily, weekly, monthly. We never hear about these 2 minutes, 10 minutes, 20 minutes. You got to do things different from the 90%, you know, 99% out there. They're doing all the same stuff, and that's why everyone fails. You got to think outside the box. Now, okay, so let's quickly go over this, right? So how to keep trading super simple. Step 1, have a fixed stop loss, fixed TP, and find out, you know, on average what works the best. What easy targets can you find, right? Step 2, obviously, you know, your candlestick patterns, your charts. You want to break, you know, just simplify where market actually wants to go, what kind of candlestick patterns are you getting, etc, etc. Number 3, entries. You know, you want to keep everything simple, stick to one time frame, stick to one candlestick pattern, you know, and yeah, just keeping it super simple. Now look at this, and this is why that's why I posted videos, guys, when I pass prop from challenges within 1-2 days, within 1-2 trades. Of course, mark some losses, well, 1 loss, but let's just even give the market the benefit of the doubt. And what I'll do is, let's just say 10 losses added. Let's just make that bigger for you to see. Spelled that wrong. Okay, 10 losses added, right? So I'm already in 10% drawdown. Look at this, 1 to 7s, 1 to 12, well, forget the 1 to 12, let's just stick to what we're saying, right? 1 to 5s. 1 to 5 risk to reward. Look how many opportunities come in the process. Even if we lose 10 trades, does it really matter? Absolutely not. Now another problem. Okay, let's move on to number 4. The biggest issue people have, right? The biggest issue people have is when markets breaking through these zones and not respecting. What do you do in moments like this, right? Well, first of all, some of these trades, look, this is like 11 p.m. UK time. This is too late anyway. This is London open, would you know, that would be opening around here. Okay, the reason you lose so many, you're not really focusing on your rejections. Bearish candle breakout, you go to a small time frame. Are you getting rejections? Well, this is a super strong, well, not super strong, but like a strong bullish candle. There's no rejection. Why would you be going for a sell? It doesn't make sense. Here, bearish candle breakout on the small time frame. I can see on the bigger time frame there's a wick rejection, so on the smaller one you'll be getting some kind of rejection. You would win this trade, right? Bearing in mind you put your stop loss to break even. Bullish breakout, price comes back down here. What kind of, you know, again, the bearish candle, what kind of rejections are you getting? But eventually the market just skyrockets up. So you will be getting some kind of rejection at some point, right? Or even better, just to leave the trade. Here now this is where the tricky part is, right? This is where a lot of, okay, how do you know when to take a buy or a sell? Well, first of all, okay, if I'm in a bullish breakout, so I'm supposed to be waiting for a you know, some signal, kind of a bullish rejection where I can just take the buy. I'm getting all bearish, another strong bearish candle. There's no entry mode here. What we're supposed to do is just back off. So let's just say even you did go for the buy trade, or you went, you know, and you lost, right? Of course you lost here, the bearish candle here. Now you're going to maybe another bullish candle breaker. You might think, oh, it's a chance for me to get back in. Another bearish candle. Now this is consolidation as well, so you just better to stay away. And 100% on the small time frame, it'll give you early signs to consolidation. But the strategy that I trade with my students, the break and retest, this is not the exact same one, by the way, guys. My strategy gives an earlier, and the way I've refined it over the years, it gives me an early indicator that the market is about to reverse. I apologize, not reverse. Market gives me an early hint that consolidation is about to start. Any students watching this video know exactly what I'm talking about. I mean, consolidation here, we avoid it. Consolidation over here, we avoid it. We only getting the best take advantage of the best opportunity that is presented towards us. But yeah, this is a video on how to keep mixing and just the way you approach trading, guys. Just approach it with a simple mindset. Do your homework, collect your data, never stop learning, and that's the only way. And if you are interested of fast tracking your trading, guys, link will be in the video description. You can join the one-to-one mentorship. Yeah, link will be in the video description. And yeah, you can check out my other videos as well. Tons and tons of videos out there. I post a video every 2 days in dropping value. And yeah, you can leave a comment. I reply to all my comments. Subscribe, like, share, and like always, take care, and I'm out.